A rate cut is finally on the way from the ECB. So, has it beaten inflation? Welcome to Market Insight. I'm Elena Casas. Eurozone consumers expect prices to rise another 2.9% in the next year, according to a survey published this morning by the ECB. That's the lowest in 2.5 years and a key sign that consumers are getting less pessimistic. Well, ECB policymakers have all but promised a rate cut when they meet next week, as inflation has come down to reach 2.4% last month. So, have they beaten high prices? Let's ask Fiona Cincotta, market analyst at City Index. Fiona, hi. Markets then are pricing in a more than 90% chance the ECB does cut next week. Is it time? Has inflation been defeated in Europe?
The ECB has signalled really quite strongly that we are on track for that rate cut in June. I think what's really coming into focus now, though, is what's going to happen after June. And there are sort of mixed opinions between ECB policymakers as to whether we should be looking at consecutive rate cuts or whether there should be a pause between rate cuts in order to assess how they're impacting the economy. Now, we do have inflation data out later this week from the Eurozone and from Germany as well, the largest country within the Eurozone. So they're going to be very much in focus. Both the Eurozone and Germany are expected to show a tick higher in inflation. So in the Eurozone, we're expecting it to rise to 2.5%. Again, that's still close to the ECB's 2% target. I don't think they'll be too concerned about a modest tick higher. But I think, there may be a little bit of caution going out just to see how things progress, because we are starting to see a slight turnaround in the fortunes for the Eurozone economy. Now, obviously, if we do see sort of the economy improving, we've obviously seen wage growth as well last week was stronger than expected. There could be a few reasons for the ECB just to be cautious about when they make the next move after June.
Markets, of course, have been impatient all year for that rate cut. If it comes next week, will it be a jolt in the arm for European stocks?
Yeah, I think we have seen, obviously, stocks in Europe rise to record levels. The DAX was trading at record highs just recently. But I do think that as this is over 90% priced in, there is sort of this understanding that it's going to happen. So it isn't necessarily going to be a big surprise to the market. And with that in mind, I think there is a fair amount of that cut actually already priced in. Again, I think what's going to be said about coming rate cuts and what the future path for interest rates looks like, that could have more of an impact on the stock markets than perhaps the actual rate cut itself.
Meanwhile, in the UK, Fiona, this could be a big week for M&A. BHP has got until the end of Wednesday to confirm its final bid for Anglo American, which has already rejected 3 bids. This would, of course, be a major takeover for the mining sector if it goes through. But what do you think will happen?
Yeah, this is a really interesting one. So, I mean, they did reject that bid, but also talks have continued. And they've continued amid some pressure from investors such as BlackRock, who own a 9.6% stake in the firm. So it does feel like that actually Anglo American are starting to engage with the takeover talks. But at the same time, we've got elections in South Africa as well. So I think the timing of this is really quite interesting. And I wonder whether this might actually be pushed out again.
Wednesday, of course, also the deadline for Czech billionaire Daniel Kretinsky to put in his final bid for Royal Mail owner IDS, another potentially big loss to the FTSE. What's the chance of that happening?
Yeah, again, a really interesting deal that's sort of being hammered out here. Now, it's interesting because the board of IDS have actually approved it. But I think what's really interesting is the difference still between the price that the share is trading at and the market cap, which is around 3 billion, compared to the offer of around 5 billion. And I think that huge difference tells us that the market still thinks that there are quite a few hurdles that will need to be jumped through in order for this deal actually to make its way through clearance. and to actually go ahead. So, I think although there is a time frame on for this week, there could be more hurdles to overcome regulatory. We've also let's not forget the UK elections, which are also sort of in the picture and could mean that there's a bit more delicacy surrounding such a deal. So yeah, another one to watch. But as I said, given that difference in the prices between the market cap and the offer price, there are still some doubts there.
Do you think, Fiona, that perhaps we could just be at the beginning of a wave of foreign takeovers of British firms, given how cheap many of them seem compared to international competitors?
I mean, it does appear to be going that way. We do seem to be having this sort of M&A processes starting to take place. And as you said, given the valuations that there are in the UK compared to abroad, does make them very attractive. And again, I say, it would be such bad news for the FTSE 100, for the London Stock Exchange, especially if we lose big names such as, miners like Anglo American, which is, it's a heavyweight resource stock. The London has really tried to position itself as a big listing for resource stocks and for miners. So that would really be a hard hit if we do lose that one. Obviously, we've already lost BHP in 2022. There have been sort of mumblings that maybe Shell was going to be leaving them previously. So, I think there are some rumblings, and that would be bad news for the UK Stock Exchange.
Fiona Cincotta of City Index, many thanks for your thoughts. Well, that's your market insight. Don't forget, you can watch more videos on Reuters.com.